Okay, I did a video on Saturday, and it basically said that we're going to have a crash. It's going to be a result of the cash storm, so much money flooding into the market as a result of the pandemic and the stimulus programs that every nation in the world has created. And we just have an influx of capital. And that capital is looking for some place to go. And once you stop spending it on gasoline and start putting it into the stock market goes up. But what happens when the cash storm stops? That was the subject of Saturday's video. Basically, the stock market pulls back, it corrects, it crashes. I don't like the word crash, but we'll use it anyway. It comes back, and as it comes back, panic comes in because it's a tumbling effect, and we get a tremendous correction. Okay, we understand that. And we understand what are the signals. The first signal, I don't see my mask, is Dr. Fauci tells me to take my mask off. I'm okay. The pandemic is behind us. So that's our first signal. Our second signal is Joe tells us that the government programs have worked. We're turning off the stimulus program. We're stopping the printing presses, and the cash is not going to flow anymore. The cash storm is coming to an end. So there is less liquidity. There's less money flowing into the stock market. The third thing is Powell comes forward and says, we need to raise interest rates. And so as interest rates go up, we see corporations who are overextended having to increase the interest payments they're making on their loans, and we see some bankruptcies. Now, Joe steps forward and says, hey, we gave you that, probably it's going to be $10 trillion before this is all over. We gave you that $10 trillion over the last 2 years. We want some of it back. So we're going to raise income taxes. Oh, okay. Less money flowing to the stock market. Okay. With that happening, we also know that there's a lot of people who have not been paying their mortgages and not paying their rent. And when we are told that forbearance is wiped away and banks are now allowed to foreclose and landlords are allowed to evict, our real estate prices come down as a flood of rentals and a flood of houses come to the market. So these are all indications that the cash storm is coming to an end. The question then becomes, okay, we know what to watch for, so we're okay as we are right now, but we know what to watch for. What's number one? Take your mask off, Carrie. You're okay. At that point, we need to start liquidating. What do we liquidate? Well, we're basically what the market is going to do is go to the risk off situation. What is risk off? That is, we get rid of high risk assets. What's the highest risk asset you have in your portfolio right now? Well, if you're a day trader, it's a penny stock. So those are going to be the first things that are going to tumble. Right after that, anything that you have in your portfolio, as I do, that are exponential growth. You've made 400% on them in the last 3 months. Now is the time to take profits, particularly if they're in an IRA or a 401k or anything that you aren't going to incur some form of short-term capital gains. So you liquidate those. Now, then from that point on, what is the next riskiest asset you have in your portfolio? I don't have it at this point. It's Bitcoin. I mean, it is the asset that has had the greatest amount of appreciation as well as interest, and it's, I believe, the most overvalued asset. And as people need cash, that's what they liquidate. So Bitcoin would be number 3. And then number 4 is the big 7. How long of a period will all this take? Maybe a week. When the hits the fan, it will be a tumbling effect, because some of you are going to put in today are going to say, oh, I'm not going to get caught in that. And you're going to put in stop loss orders. Well, you need to realize that when you put in that stop loss order, it's not hidden over there. It's seen by every quantum computer that every hedge fund owns. They see it. Hey, there, Kerry's got a stop loss on his Amazon at a 5% down. Let's go take Kerry's Amazon stock. And they literally sell it down to get my stock, get it, and then let it go back up. That's how it works. So I'm not suggesting you put in any stop losses. I won't. Just pay attention. Pay attention to the market. Pay attention to Dr. Fauci. See, when he tells you to take the mask off, sell. Okay? If you aren't convinced at that point, when Joe says we're stopping the stimulus, sell. Okay? All right. That's the program. Now the question becomes, all right, if I know when to get out, how do I make money in this? That's what this video is about. How do you profit even when you're out of the market? That's what we're going to talk about. I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. I run a tribe. Yeah, I run a tribe. It's under bestofusinvestors.com. Come there, give me your name and your email address, and I'll send you a link to our Discord. That's where our tribe meets. That's where we exchange ideas in depth beyond what I do on the videos. I'll be right back with you. I'm going to tell you how to make money when this bubble bursts, to use Mark Cuban's terms, or the crash occurs. Be right back.
Best of Us Investors presents Kerry Grinkmeyer.
Okay, you're good now, right? You know what to watch for, so that you got the signals. Now what you need to do is know where to go. Okay, so how do we determine as the stock market loses, let's just say it matches March and it comes down 34%. Where do you go? And more importantly, if you know it's going to happen before it drops 34%, where do you go? Well, the first thing you do is you go to cash, okay? And see if you're right. If in fact, when you took your mask off and when Joe cut off the stimulus checks, you went to cash, do you go someplace, or you go to cash, do you reinvest somewhere? No. You sit back and you watch. You might have been wrong. And it may just been a little bit of a dip. Okay? As it comes down, you want to be looking to a ticker TLT. That's the treasuries. Let me show you why you want to look at TLT. Do you want to look at corporate bonds? Let me show you. Come with me here. Okay, so we now know what the signals are that the market is going to correct or crash, and we know what we need to get out of, but where do we go? What I did here was compare three options. One, the blue line is the S&P 500, and as you can see, when it crashes, the multicolored line pretty much follows it. That's corporate bonds. Okay? As it goes up, the S&P 500, the corporate bonds kind of track just behind it. It doesn't reach the heights that the S&P 500 does. But what's that orange line? That orange line is the TLT. That is the Treasury, the 20-year Treasury. So let's look at it. As the market, the S&P, was going up towards 2020, it kind of moved just along with it. No major. But when it, in February and March, when the S&P 500, look what happened to the Treasury. It climbed, and it climbed tremendously. So if I go up with the Treasury, if I get out back here, when Dr. Fauci tells me to take off my mask and Colin Powell tells me he's raising interest rates, if that's where I get out, and let's say I'm right here on the S&P 500, and I take my money and I move it over to the Treasury. As the S&P and the stock market goes down, the Treasuries go up. Now, do I stay in the Treasuries? Probably right about here, I sell my Treasuries and I buy back into my stocks, my S&P 500, because the real gains after the crash are going to be in the S&P 500. So I'll follow it on up. If I stayed here in the Treasuries, I might have a little more upside, but I'm not going to match the upside that I get in the S&P 500 or the NASDAQ or the Big Six or your exponential stocks. This is where all the gain is. So the name of the game is recognize when the crash is going to come. Move to cash, and when it actually happens, move to Treasuries. You don't want to go to Treasuries until it happens, because it may not. But you want to move to Treasuries and ride them up until you see this increase in the S&P or your stocks of your choice. You'll then get a little bit of a dip. That's when you want to move from your Treasuries to your stocks, and you just sit back and ride it on back up. How long will this take? That's hard to say. We can go back further and you'll see sometimes if we go back, okay, here we are. We're just moving along in 06, 07, 08, and we have the subprime crisis. What happens? If we were alert, we got out and we moved to Treasuries as the subprime crisis crashed. As it hit its bottom, we sell our Treasuries, we get back into the stock market, and we ride it back up. So, is that real difficult? I don't think so. We want to be in the stocks that we know and that are working towards the future, because the future isn't going to change. We're still going to have 3D printing. We're still going to have genome sequencing. We're going to have satellites in the sky. We're going to have electric vehicles, but we're going to have to go through this correction as the money storm stops. So, that's not going to happen in the next 3 months, I don't believe. We're waiting for Dr. Fauci to give us our first signal. Okay, history teaches us when that S&P goes down, it becomes a risk-off trade. The smart money says there's too much risk in the market, we got to go someplace safe. What is the safest place? The US dollar. At least it is now. Now, some of you are going to argue it's Bitcoin. I won't get into that argument with you because I don't know. History, we don't have a history on Bitcoin. So without a history, I'm not going to do it. I don't feel comfortable doing it. I can look at that chart and I can tell you what's going to happen based on past history. So that's what I'm going to do. I'm going to TLT. I can look back year after year and see the indication that I can make somewhere from 20 to 38%, maybe even as high as 40% as this risk-off trade happens. Now, I'm not going to be there long. I'm just waiting for that sucker to hit the bottom and bounce. And when it bounces, it will then come down a little bit more, and I'm back in. I'm back in probably to everything that I sold, other than those maybe that didn't meet my expectations. All right? So when we see the signs, and I gave you the signs, I went into them in great detail in Saturday's video. If you didn't see it, go see it and make a list. Put it next to your computer so that when Fauci speaks, when Joe speaks, when Powell speaks, you say, Hey, that's what Carrie said. It's going to happen. Let's get out. Sell, sell, sell. Okay? And then sit. Don't go directly into Treasury. Sit. Confirm. Get confirmation that you were right. Okay? Then you go into the Treasuries. And then we reinvest. Because what we want is we want to turn a bad event, a crash, a correction, into a good event. We want to get out up here and then get back in down here. Is that so difficult? No. What's it require? Paying attention, understanding the game you're playing. Now, how do I know this? I'm a retired financial advisor. This is what I've done for my life. Did I do this aggressive, this intelligent investing as a financial advisor? No. No, I could not take this kind of risk, this kind of intelligence and put it into my clients' portfolios. Because if I'm wrong, God help me, they're coming after me. That wasn't appropriate, Carrie. That was too risky of an investment. Yeah, but, okay. So that's where we need to go. That's where we need to be. What is this all about? What is this Best of Us Investors all about? Right now, we've got, I guess, about 130,000 subscribers. That's up from 1,000 subscribers a year ago, January. We're growing pretty damn fast. And more importantly than the YouTube channel is the Discord. And let me give you some understanding of that. You need, as an investor, to have collective information that helps you make better investment decisions. How do you get that? You come to a collective tribe. That's what I call it. Right now we're over 18,000, headed for 20,000, probably before the end of the month, of people who come together and say, have you considered this stock? Have you considered this situation? And then we as a group analyze it and make a decision. We're actually partnering with Seeking Alpha so that we have a group of analysts we're putting together. We're going to analyze the stock. They're going to create a little video that you can go to a library and say, I'm interested in XYZ stock. Has Best of Us Investors analyzed it? And you'll be able to find maybe a 3 to 5 minute video where a group of, say, 5 people talk about that particular stock. We're not telling you what to buy. We're not your financial advisors. We're a collective group of people who have a common interest, but have different experiences, different knowledge, different goals, and we work like a quantum computer. Eventually, there's going to be 50,000, 100,000, and we just work together. We level the playing field. This is what Wall Street has done for years and has kept you out and just taken your money out of your pocket. Well, we're leveling the playing field. If you want to be a part of that, go to bestofusinvestors.com. Give me your name, your email address, and I'll send you a link. You can come in and find out what it is. For the premium channel, you can see my portfolio. You can see how it grows, what I invest in. You get notified when I do trades, all that malarkey. So if you want to be a part of it, you know how to do it. So that's how you make money in a correction. So don't be afraid of it. It's a good thing. A correction's a good thing. It's a time for those stocks that you've made so much on to you get out, let them come back down, buy back in, ride them back up, and even make money as it's going down. This is money for nothing, chicks for free. See you tomorrow.